What is going on in Kenya? The latest numbers from Kenya National Bureau of Statistics are out for the third quarter of 2025, and honestly, they are a mixed bag of absolute fireworks and some serious red flags. The overall economy grew by 4.9% to over 4.495 trillion Kenyan shillings. That is faster than the 4.2% we saw in 2024. But if you dig into the details, you'll see some sectors are on fire while others are, well, not. So if you want to know where the money is moving in East Africa's biggest economy, stick around. We are breaking down the trillions, the percentages, and the trends that matter. Let's start with the rock stars. If there was a winner this quarter, it is Accommodation and Food Services. This sector grew by 17.7% in Q3 2025 to over 71 billion Kenyan shillings. Why? Kenya co-hosted the African Nations Championship, the CHAN tournament. Visitor arrivals at Jomo Kenyatta and Mombasa airports jumped by nearly 10%, hitting over 578,000 passengers. All those people need a place to sleep and food to eat. But the hospitality sector wasn't alone. Check out these rebounds. The mining and quarrying sector went from a massive contraction last year to expanding by 16.6%, contributing over 31.3 billion Kenyan shillings to the economy. And the construction sector? It pulled off an incredible U-turn. They went from shrinking by 2.6% in 2024 to growing by 6.7%, contributing more than 279.8 billion Kenyan shillings to the economy. You can actually see this happening on the ground. Cement consumption shot up by 16.2%, and iron and steel imports nearly skyrocketed from 220,000 metric tons to over 336,000 metric tons. That is a lot of new buildings. Even the manufacturing sector saw a boost, growing by 2.5%, adding over 282.9 billion Kenyan shillings to the economy. But here's where we see the red flag. The growth was driven by non-food items. Cement production was up nearly 16%, and galvanized sheets were up 20%. But the food subsector? It took a hit. Sugar production collapsed by a staggering 49.4%. That brings us to the agricultural struggles. While the sector overall grew by 3.2%, adding more than 819.7 billion Kenyan shillings to the economy, thanks to milk and flour exports, the decline in food crops is concerning. Coffee exports more than halved. They dropped from over 17,000 tons down to just 8,300 tons. Vegetable exports are down, fruit exports are down, and tea production is down nearly 3%. This is putting pressure on something we all feel, the price of groceries. Speaking of money in your pocket, let's look at the macro picture. Inflation ticked up slightly to 4.42%, driven by those food prices. But the interesting story is the Kenyan shilling. It actually gained a tiny bit of ground against the US dollar, appreciating by 0.2%. However, if you traveled to Europe or the UK in Q3, you felt the pain. The shilling dropped over 6% against the euro and 3.6% against the pound. But for investors, the stock market story is the big one. The NSE 20 share index went from 1,776 points in September 2024 to a whopping 2,973 points in September 2025. That is a massive jump. And the value of shares traded didn't just increase, it went parabolic. We're talking about a leap from 5 billion Kenyan shillings to nearly 123 billion in just 1 year. Money is moving back into the markets. The number of shares traded in the Nairobi Securities Exchange more than doubled from 334 million in September 2024 to 848 million in September 2025. To help that money move, the central bank cut interest rates aggressively. The central bank rate dropped from 12.75% down to just 9.5%. They're trying to stimulate the economy, and it seems to be working for credit. Broad money supply hit 6.4 trillion shillings, up 7.5%. Moreover, net foreign assets, NFA, grew by 2.7% from 923.5 billion shillings in September 2024 to 948.20 billion shillings as at end of September 2025. The increase in net foreign assets was on account of foreign asset holdings of the Central Bank of Kenya, which increased by 30.8% to 1.431 trillion shillings in September 2025. Total domestic credit registered a growth of 13.9% from 6.868 trillion shillings in September 2024 to 7.820 trillion shillings as end of September 2025. This growth was supported by credit to private sector and total net lending to government that grew by 6.6% and 32.5% respectively over the review period. Credit advanced to enterprises in the construction sector improved from 129.2 billion shillings as at end of September 2024 to 195.3 billion shillings by the end of September 2025. But, and this is a big but, there is a massive warning light flashing on the dashboard: the current account deficit. This is the gap between what Kenya earns from exports and what it spends on imports. In the third quarter of last year, the deficit was 43.5 billion shillings. This year, it widened to a staggering 135.3 billion shillings. That is more than triple. So what's the verdict on Q3 of 2025? Kenya's economy is a story of two halves. You have a booming service sector, a construction rebound, and a stock market rally on one side. On the other, you have declining food production and a ballooning trade deficit. It's a delicate balancing act. The next quarter will tell us if the growth can be sustained without overheating. If you want to keep up with these numbers and understand what they mean for your money, hit that subscribe button. Thanks for watching, and I'll see you in the next one.